Welcome back, everyone. It has been a while since I discussed gold on the channel, and as you know, we've been in gold for a while, been talking about it for a while. And I just thought I'd do today's video discussing some updated thoughts on where I see gold now and how I'm thinking about the investments in gold. So I want to start by saying that I know that gold is a very emotional type of investment. So it's a type of thing that if you feel better owning more gold, well, you could own more gold and it doesn't have to be equities. If you're bullish, you can own equities. If you're not, then you can own physical. However, and I would never tell anyone that they should sell their gold because that's a personal opinion. And I'm not saying that. That's not even what the point of this video. That's just an example. I still own a lot of gold investments, despite whatever I say going forward. And the other thing is, everyone owns it for their own reasons. But for me, I never owned it because of the viral apocalypse or whatever you want to call it. I never owned it because I thought about because I thought it would do well in inflation or an economic collapse or that type of thing. For me, it was mostly a out of favor value play and in an environment that was always headed for what we see, what we saw, what happens around the world these days in money printing and potentially eventually that leading to inflation and with the bonds stuck at zero, potentially gold recapturing some of that safe haven demand. And I'll talk more about that later. But when we bought it, I think there was QT going on. Remember that? Quantitative tightening? Feels like lifetimes ago. But anyway, it's been a while, and we were always headed for a money printing environment. That was just how it is. And so for me, the thinking that that's where we were getting to, and people would probably want to own some more gold then because everyone seemed to dislike gold a few years ago. And so that was a big part of my investment thesis. So unlike a number of gold bull commentary that I've seen out there, I actually don't think that all real assets are in bubble territory, especially given the macro environment. If the macro environment is print money, buy bonds, trickle down, whatever BS you want to call it, well, then I think that there's a lot of things that's valuations should really be stretched to the limit. And I think that there's a good chunk of stocks, particularly the non-super cap stocks, that really aren't ridiculously expensive. They're kind of like historically average and more, some are even cheap. And the point is, I don't think they should be. I think given this environment, they should be very expensive, but not all of them are. And now that being said, there are some, I don't want to get into specific names, but there are some stocks that don't make any sense, but that's fair. Some people think they do, I guess. It's not for me to know everything in the market. Now, I know I got on a bit of a tangent here, and here's a bit more of a tangent, but I do think bonds are historically and perhaps, well, by almost any metric you look, ridiculously overvalued fundamentally. And why is this? Well, could they go up more? Absolutely. If you're printing money and buying bonds, they probably will go up more. Except that I think you get to a point where you look and there's all this money in bonds, and if the environment ever shifts from deflation or disinflation or whatever nonsensical term that someone wants to call it to inflation, well, then all of a sudden you have the biggest bag holder moment of all time where there's all this money in bonds and they're like, these bonds don't yield anything. What do we do? And that's a lot of potential for safe haven demand. And now, don't get me wrong, there's a good chance that central banks will just buy all the bonds and the bondholders will make money, but that doesn't stop it from being a basically guaranteed loss situation, except that it's not. So it's a complicated situation. But for me, the thought was always, well, some of this lots of money that was created might say, huh, we should buy some gold. And that has the potential to move the price of gold up significantly. Now, zero interest rate or low interest rate or negative real interest rate environments are good for gold. And the Fed has recently said that they expect rates to be zero through 2022. In reality, though, let's look at it a different way. Rates are zero long enough for Warren frickin' Buffett to want to dump his bank stocks. That sounds to me like it could be a lot longer than 2022. Now, I'm also looking at, you can look at the debt that's going to be racked up between now and 2022, or even has been up to now, plus year and a half more of that economy. And realistically, I don't know when they'll want to raise rates again, but I don't know if they can raise rates again. And realistically, the only reason that they do probably is because there's too much inflation. And that leads back to the problem of, well, too much inflation. When you can put money in bonds and zero yielding bonds with too much inflation, maybe not. Maybe something is inflation hedge, could be stocks. Real companies might keep their value better than bonds, or again, gold. But the point is, even with all the zero rates and all this stuff, we haven't really got to the big dose of inflation yet, which is surprising. Well, not surprising, but it's surprising that gold has come this far and we haven't seen any of, well, any real big dose of inflation. Now, I know I'm speaking about inflation here, and I just want to clarify because you may be wondering, do I own gold for inflation? Not exactly. I mean, you can own gold for inflation. You can, fine, but for the miners, the costs are going to go up also. And historically, yes, gold does okay, does well in inflationary environments. So does energy. So does copper, materials. It's all about how you want to play it. Do you want to be defensive, aggressive? But yeah, you can, but that's not exactly why I own it. As I've said a few times and kind of just want to explain well enough, I own it because of what I think the zero forever path that we're on with currently interest rates means. And that again, some of the money that's created, some of the um, safe haven demand money would look for something to protect its value. And that is the increased demand for protective value assets was more so my gold thesis. So despite all this and all this thinking, I've actually would say I might be lowering my rating for gold. I used to maybe have it as a buy or a strong buy. Now I'm thinking that it's probably moving towards a hold. I do expect gold to go higher in the near term. I do. Um, that said, I have some of the some of the more successful investments or the luckily timed investments in gold, I would say, have gone up a significant amount. And while I do think that many of them can easily go up more, if something has gone up 200%, it means it's three times the price, has more upside or has more downside potential and less upside potential. So on a few of the ones that I've been very lucky to be invested in, I have taken off some of my initial capital. Now, I did speak about a gold stock recently, haven't sold any of that one. But some of the ones that are up, that we got in at a lucky or fortunate time a few years ago, some of them are up 200%, and I've been taking off some of the initial capital that I put in because I do see some more interesting opportunities elsewhere, reducing the risk. And so yeah, I'm still hold a significant percentage of my portfolio in gold, probably always will to some extent, but I've shifted away from buying more at this present time. Now I can hear you. You're asking why? Why? Isn't this the perfect environment, perfect time to buy gold? They're printing money like crazy. Do I think they're going to stop? No, I don't. I think that they might slow down for a bit, but it's coming back. They're going to print money as long as they can. So hearing that, you're probably thinking, well, why am I less bullish on gold now? And the simple answer is I'm not less bullish on the prospects of gold. I'm just thinking that gold has just run up 50%. And that's a big move for gold for there being no real boom of inflation. Now, do I think gold's going higher near term? Yeah, I do. Um, I do. So that's why I haven't sold more. I've just taken off a little bit of money. Now, would I be surprised to see gold, let's call it 2200 plus in the near term without a pickup in inflation? Yeah, that would probably surprise me to see it another $400 higher in near term without a pickup of inflation. So I think we're realistically probably in about the middle of approximately a fair range. And that's fine for holding and for carrying, well, having the investment throughout the cycle, but it's not a screaming buy. You've if you've been investing in gold for a while, you can be up on the position, and it doesn't mean you should sell. It just means have a look and think about where we are. And I'm also thinking that part of the thesis I hear, or part of the gold, a few things that some gold bulls have said is, well, money's dying, and I, I I get it, I see it, but realistically, I look and I'm think, well, if that happens, realistically, you could be levered out of your mind in real estate or in any real assets, just levered out of your mind and probably do at least as well, if not better than gold, because if money dies, debt dies. And so there's always this kind of balance between one asset class and another asset class and how you want to play a thesis. Now, do I think money is going to die? It's highly unlikely, but if you look at the history of money and currencies, they're terrible investments. And I see that. That's part of the reason why I like gold. You look at money and it's making its way to zero very slowly. Could it make its way there quicker? Yeah, but it's kind of like what was the guy's name? Zeno, the philosopher, said you can never get all the way to something. You can only get halfway there, and then you can get from halfway another half, and so on. That's kind of what money does. It just slowly goes to zero in that general direction, but never exactly gets there. Now for silver. I figured I'd throw this in here because a few people have asked me actually recently, what am I thinking on silver? And I'm going to start by saying I'm not exactly a silver bug, and it's a bit trickier to measure because gold, you have the investment demand and safe haven demand and whatever. Silver, you have that, but it's more speculative, and you have industrial demand, and so it's really hard to measure. And not only that, supply is also hard to measure because you have um, Gold, you have a whole bunch of above ground supply. Silver, not so much, but 74% I think I saw of uh, silver demand, or sorry, silver supply is from a byproduct. So it's a trickier market to measure. That said, there's a value in tricky markets. There's a value in markets that are like this because they can break. And I like markets that break a lot. And so I can see that there's definite value potential in having something like silver in a portfolio because if your upside, if things break, is, big upside and you think things, well, they might break, but they might not break. By break, I mean get out of hand, speculative frenzy type thing. So if your upside potential is significantly more than your downside potential, you don't need the best odds of it happening. And personally, I'm thinking that the odds of a speculative frenzy type thing in silver might be a bit lower now because I question how much um, Bitcoin and other cryptocurrencies might be eating into the speculative demand for silver because often silver was seen as the more volatile cousin to gold, whereas now we have Bitcoin that serves a similar value. Don't get me wrong, and I know I'm going to get attacked from both sides here. Um, I'm not saying Bitcoin and silver are remotely similar. I'm saying some people might see them investment wise in a similar light, and there might be some overlap of money that would have gone into one, might go into the other. I know they're completely different things. I know. Please don't fight me or hate me for saying that. Fight me if you want. And lastly, on silver, um, high beta, highly volatile things are often better ideas than if you think it's a coin toss, one way it might go up 4 times, and another way it might go down 50%. Find a bunch of those, buy them because there's value in that type of thing. But at this point, I do think of silver as a two-way bet. Could go up, could go down. I don't know. I don't have a strong view here, but there's probably some value in having it in the portfolio, but I would size it carefully. So in conclusion, there are still definitely a number of names that look pretty cheap. Now, some of them it's because of perpetual failures. Others it's because the market doesn't like them for some reason or hasn't noticed them. And that said, I'm still long a few names. I'm still own a significant amount of gold, but it is not at the top of my buy list right now. I have some other things that I'm kind of more interested in, and I'm using some of the initial capital that I have taken off the table on some of the successes in gold to hopefully uh, to put them to work in the other places and get hopefully have some success there. And that's basically my updated view on gold. Thanks for watching, everyone. I hope you enjoyed. And remember, none of this is investment advice because I am often wrong. And remember that when I say there's something that I don't think is going to happen or some target that I have that's absurdly low for gold and you think I'm wrong, because I probably am. Anyway, hope you enjoyed, and I hope that you found something informative and I didn't insult you too much. With that, let's call it a day, and I'll catch you next time.